Hey everyone, this is the Trader Investor coming to you for today's market analysis. As you can see, the markets have opened up about 10 minutes ago and they sliced through the imbalance, they sliced through the hourly order block that I had talked about in yesterday's video, and we're way down here. We're in territories we were at on May 4th. So not that far down. I mean, it's significant. It's 1.25% down for SPYs. Now, what I'm looking at is this area where it came down to is near the lows of last week, Tuesday. So because we're near those lows, does price want to come down and test those lows? Or does price want to close this gap? We have to close this gap. My thinking is we're gonna just take care of this and go back this way. But by what I mean by take care of this is this has now created a potential area of liquidity, so price could get manipulated in this area, trap shorts, trap longs for a while to resume its upward direction, or trap shorts, trap longs, and then decide it wants to just do this and do this. So again, as I say all the time, we trade what the charts tell us. We don't trade what we think should happen. So if we do that, we are patiently waiting for this 15-minute range to be formed. Where would that range be, and where would price go based on that range? So as you can see, these red dot lines here are last week's lows. So we're very close to last week's lows. So this is going to act as a potential support, which could turn into resistance, but be very careful of manipulation. So for me, if this is the 15-minute range low today, if this is what it's formed, I'm not in a hurry to enter a short position. I want price to get what it needs to do, all the manipulation taken care of in this zone, and then either break below it, test it, and continue down, and we have a long way to go down, or it's going to break this, like I said earlier, it's going to reverse test it and go. So for me, break of structure, this would be a good entry. Break of structure, this would be a good entry. I like to play it safe and get confirmation, and I don't need $5-6 moves. I just need a dollar move based on the number of contracts that I enter. So that's what I want to teach you, is you don't need big moves. You just need to have enough confidence in your stop loss, and you minimize your risk. And please take a look at my risk video. Minimize your risk and capture the gains by just small moves. Small moves are enough. So this is where the SPYs are setting up beautifully for a potential entry. I say beautifully. People who are long are in pain now. They don't think this is beautiful, but if we are trading, we're trading day by day, this is a potential nice setup, because we have a possibility to close this gap. And closing that gap is quite some distance, so it could be a payday that is nice for us, right? $3 move, that's a lot of movement to be able to capture, if that's what the market wants to give us. I'm not saying it wants to do that, but a lot of times we close gaps, and even if we look at fib retracement, it could want to go to 50%, 68% retracement to bounce back. So let's not be in a hurry to say, oh, it got here and it's going to continue. No, if it closed 50% of that gap, we're good. And even if we go close to open, right, so the best case scenario we can expect is somewhere around the 61.8% retracement. If it goes to there, it could reverse. So let's be careful. We have some potential headwinds here let's be careful. But this gives us a good distance from 413, almost 414 area to 416 area. $2 move, that's enough to capture a good amount of profit. So let's just be mindful of that, but let's not be in a rush to say, oh, it got here, it's gonna go here, it's gonna go here. We don't know that. So let's just carefully monitor our trades, have our stops in place, and just let's ride whatever the market wants to give us. So right now we don't know what it wants to give us yet. Qs, same scenario. We have a gap. We're going to potentially close that gap, 322.50 to 325.50, $3 move. That's a nice move for a gap play. IWM, same thing, and now IWM just took care of an imbalance. There was a long-term monthly imbalance, hourly imbalance. So hourly order block, sorry, too early in the morning, an hourly order block. We are taking care of that order block. Now sometimes what I see happen is price will push up a little bit and it wants to completely close this order block before it resumes. So let's be mindful of that. And while I'm in the subject of mentioning wrong things at the wrong time, I want to draw an imbalance. This is a true imbalance. We have an imbalance here. We have an imbalance here. So all of them have this imbalance today because we have a gap down. So that's why it is very likely we have this gap down, very likely that is going to close those imbalances. And because this order block is mitigated, this imbalance is already taken care of, so we have left a new imbalance today. So in all of the markets you will see that imbalance. So let's not rush to say it's going to close that imbalance immediately. In the diamonds, I drew some imbalances yesterday or in the past, and that has been taken care of. We have left a new imbalance up here. While I'm in the process of drawing, I might as well draw all of them. So we have this imbalance. Now as you can see, the diamonds started up here and they're pushing down. It looks like the diamonds want to push down some more. We have the lows of the 15-minute range today coincides with the highs of the 15-minute range of Thursday. I always look at these ranges to tell me where price could potentially go. So if we break this, is our headwind coming at the 343 area? Is it coming at the 340 to 50 area from 343.60? To me, that's not a lot of distance to cover, so I'm just going to skip that as an entry because there will be others that will give us good potential. And IWM is setting up really nice. I want to see a close above the 15-minute range on a 2-minute basis. If I see a close there, I'm going to enter for a gap play. That's what I'm going to work on. And IWM seems like it wants to lead the way, and the SPYs as well, they're not yet where I want them to be. So because we continue to push down, with the exception of IWM is pushing up, but it's not that strong. Usually you see a good push like last week Thursday. Once it breaks that 15-minute range, it's off to the races. Once it breaks that 15-minute range, it starts to be off to the races. That's why when I see this, it takes a couple of bars to get through, I'm a little bit more cautious. Not cautious meaning I'll take it, but I'll have tighter stops. But here I can have my full stop in play and let it ride. So I'm just gonna watch what it wants to do here. So this is how the markets are setting up. I just wanted to do a quick review. Don't forget to like this video. Don't forget to come back later today when I do the analysis of the close of the market. Did it line up with our assessment? Did it go against us? Is there anything else that we need to look at? We'll talk about all of that. So with that, have a great day. and I wish you success. Take care, everyone.